Hey, I'm Jackie from Thompson Sustainable Homes. With interest rates rising and rumours swirling, we thought we would talk to the experts to find out what's really going on. Jono from SMS Finance, thank you for joining me.
Thanks for having me, Jack.
Why does the Reserve Bank continue to put the interest rates up?
Part of the RBA's role is to assist in maintaining a healthy economy. So if we look at the beginning of COVID, for example, we all thought the economy was going to really struggle and things were going to get really tough. What we experienced was interest rates decreasing, and as a result people were encouraged to go out and spend money, borrow money, purchase bigger homes, renovate their homes, buy cars and so on and so forth. As a result of that large surge in spending, that's partially contributed to rising inflation rates. Now at the tail end of that, the Reserve Bank's trying to cool the market a little bit, and they're doing the reverse thing in increasing interest rates.
So I work for Thompson Sustainable Homes. The most important thing for me is how is this going to affect my clients when they're building their first home?
So if one of your clients is in the middle of construction, they're not in a position to fix their loan. So if you're halfway through building your new home, a bank won't allow you to refix your home loan. Given typically during construction, repayments are interest only, so the client's not repaying the principal debt and they're just servicing the interest. Repayments are quite minimal. So yes, whilst interest rates can increase, the repayments probably aren't going to vary significantly.
Yeah, because a lot of people do go, oh, how am I meant to pay rent, which on average at the moment is about $600 a week on the Sunshine Coast, and pay my mortgage, which is going to be like $700 a week, but it's not like that at all, is it?
Correct. So the majority of banks will allow you to make interest-only repayments during that construction period, and part of the method for that is obviously during the period that people are building their homes, they're often paying rent and servicing a mortgage. So there's interest-only repayments and principal and interest repayments. So principal and interest repayments is when you're actually reducing the debt. Interest-only is when you're just servicing the interest accumulating on the loan balance.
The media love clickbait. They love to make everyone feel like the sky is falling. I've heard a lot of people saying it could shoot up to 12%, 15% by the end of the year. Let's be more realistic and say it goes up to 5%. How much is that for me on a $500,000 loan?
Yep, so let's say interest rates are 3.5% currently. If they were to go up to 5%, weekly repayments would increase by roughly $100 per week.
Okay, so not thousands?
No.
Unless you're a bowler and you've got like a $5 million house and you can afford it, we good.
Yeah.
If I've built or I'm in my house at the moment, should I fix my rate now?
It's a very good question. It depends on your own individual circumstances. So for example, if the prospect of rising interest rates going above 5% terrifies you, then the conversation around fixed rates becomes relevant. The issue is fixed rates are already 4 to 5 or even higher, whereas variable rates are in the low 3s currently. The benefit of a variable rate home loan, there is flexibility there, so people that are comfortable with interest rate increases typically prefer that flexibility in that they can make additional repayments and reduce the debt quicker, whereas a fixed loan is more restrictive. You can often not make more than a certain amount of repayments per year. What we often do is suggest a split structure where we could have, say, 75% of the loan fixed and the remaining 25% variable. So that gives the borrower, or our client if you will, the flexibility and security of fixed repayments and the ability to make additional repayments on the variable part of the loan.
I kind of like to do what everyone else is doing. So what is everyone doing at the moment?
So three months ago, everyone was looking to fix, but given the average fixed rate home loan is above 4.5%, it's getting much more common for people to jump at the variable rates.
Either way, with the interest rate rising, we're going to pay for it, whether we're a renter or whether we're a homeowner, because investors, they're not going to say, I'll kick back, I'll take this for you. So how do I get into the market if I want to? Like, what do I need?
The first thing is to engage a broker sooner rather than later.
So what do you do though? What does a broker do? Because a lot of people actually think I have to pay you to work for me.
Yep. So part of our job, we work with 30 to 40 different banks. So each bank does something slightly different. So lender A and B may not want to know about a particular customer, whereas bank C and D may be begging for their business. Our job in the process is to understand our clients' financial objectives. Number one, we need to get them the money, and number two, we need to get it in the most competitive fashion.
I understand that it can be quite scary to buy a house, and a lot of people have everybody in their ears telling them what they should and shouldn't do. So with rising interest rate, is now the time to just sit on the fence and wait?
Now's the best time to start inquiring around how it all works, and if you're in a position to look to do so. Chatting with a mortgage broker is going to tell you and inform you around what repayments look like and what the overall process is. So it's definitely a good time to start looking and talking to someone about what needs to happen.
And if you can afford it, why wouldn't you? Like, if you can afford to save, why not do it? Because there's the biggest rental crisis that the Sunshine Coast has ever had.
I couldn't agree more. Why not pay off your own home than pay off someone else's mortgage?
Yeah. When looking for a loan, should I stick with the major banks or should I be looking elsewhere?
You should certainly consider all your options. There's credit unions and smaller banks out there that are, if not more competitive than what the majors have to offer.
Okay.
So depending on your situation, it definitely pays to look at all your options.
And currently, what's the government doing as an incentive for first home buyers?
Yeah, so there's the first home loan deposit scheme and the new home loan deposit scheme. It's essentially a government-backed guarantee which allows a first home buyer to get into the market with as little as 5% deposit.
Okay.
And they don't pay any lender's mortgage insurance, so it's massive. It's really helpful.
Hey Jono, thank you so much for coming in and catching up with me today, putting everyone's mind at ease about building. The media obviously doing what they love to do best, blowing things out of proportion. If I am ready to start building now, my new house with Thompson Sustainable Homes, how do I find you?
You can Google or Facebook SMS Finance. It's actually our 40th year in operation this year.
Oh, awesome, congratulations.
Thank you.
And thank you so much for coming in today.
No worries, it's been a pleasure.